So let's go back to the entire story around rising oil prices. The body representing the biggest oil-consuming nations, known as the International Energy Association agency, today holds a meeting to consider additional measures that could help tame the surging high oil prices. The IEA meeting comes in the week of OPEC alliance decisions to pump more oil into the market as the U.S. President Biden taps 1 million barrels per day from his strategic petroleum reserves, putting the highly volatile week in the markets into perspectives. For me, is a global market strategist and managing partner at Minnis Asset Management. Uchenna Minnis joins me on the line for this conversation. Thank you, Uchenna, for coming through this evening.
Yeah, good evening, Bosun.
Hey, thank you so much. How would you summarize the global oil markets week ending today, from OPEC Plus meeting to the US 1 million per day strategic reserves, and now the IEA meeting? Between the producers and the consumers, it looks like everybody's in a fix, in a kind of a fox right now when it comes to the global oil space.
Yeah, I mean, Bosun, you expect that to happen, really, because we're already seeing strain in the consuming market, and US, who happens to be top global consumers of oil, basically are starting to feel the effect. India also are also complaining. So you expect at some point that camel's back would have to break, and that's what we're seeing right now. Even the UK is looking to sort of release some of their reserve into the market to sort of ease the supply, and that's what we're seeing in the market right now, Boston.
Yeah, so like I said in my earlier comments, both producers and consumers are in a bit of a fix right now. Everyone's trying to say, look, whether you're buying or you're selling, you're buying oil, this current price levels looks really, really high across the aisle, as it were. So there has to be a marriage of both the producers and the buyers, as it were. Do you think the measures being taken by OPEC, for example, 432,000 barrels per day into the market from the month of May, and 1 million barrels per day from the US SPR, will be enough to calm the market, especially oil prices at a very highly elevated level?
I mean, one thing is clear, and OPEC can go ahead and start to cautiously work on its supply quota and whatnot. But the truth of the matter is, nobody is really talking about the elephant in the room, and the elephant in the room is the Russian invasion of Ukraine. I mean, if that continues to happen, I mean, there's always going to be that uncertainty around the risk around the oil market space, and that's what we are seeing, really. So, yes, the US is looking to put out their reserve into the market space. We're seeing OPEC also gradually increasing their production quota. But what you're getting to see is significant risk right now from the invasion of Russia, invasion of Ukraine by Russia, and until we get to elevate on that risk, we will continue to face that volatility in the market space.
Interesting, but let's count the costs. How much damage has the Russian war on Ukraine done to the global markets in the first quarter of 2022? Some say this is the worst we've gotten in about 2 years in the first quarter as far as the global equity space is concerned. What's your take?
I mean, it's quite it's close to what we want to say if we're looking at a possible World War III. You see that risk is really the play, really, and that's what we're seeing right now. I mean, when people talk about a risk of World War III, they talk about this, really, and you can see what Putin has also said, that if they continue to expand into the space, or we have NATO coming into the war space, what we could see is a nuclear war, basically. So until that risk continues to or is being treated or being worked on, what we would see is we'll see that instability, that volatility in the market space, and the damages, yes, is quite significant given the fact that we're already seeing instability across the energy market space. We're seeing risky assets behaving in some erratic way they've not behaved since the pandemic. So and a combination of these factors those are quite significant going into the next quarter.
Interesting. So, what asset classes have been the most hit since the Russian onslaught started a month ago? I'm sure there have been some. If you draw up a gainers and the losers list, I'm sure gold will be among the gainers.
Yeah, I mean, the ride has always been the ride right now. Given the context, there's precious metals have really been overperforming. The energy space ETFs, energy ETFs have really been significantly hit. However, the fact that we are seeing the commodity trade ridiculously higher, that has also translated into economies whereby purchasing power has been reduced. We're already complaining, or we're just talking about what the US and India and UK are looking to do as regards to higher oil prices. So, I mean, what we are getting is we're coming out from the pandemic trying to sort of go back to pre-COVID level, and what we are seeing is we're going into like a possible World War III, and that is just trying to moving, let's say, like would say here, moving from the fry pan to the fire, really, and that's what we're seeing, Boston.
Interesting. So, give me your outlook on the global markets as we step into the second quarter. What's your playbook? No one knows when this particular military operations in Ukraine will end by Russia. Anytime President Putin is likely to wake up and say, well, I think it's over, let's pull back and all of that, and we'll begin to dig through the rubles, as it were, because the ruble itself is not in very good shape right now. So, what's your outlook from the second quarter? Should we prepare for a long haul here, or we should just think this is going to go away sometime soon and we'll go take back our normal lives?
Main is you would see some sort of ally formation, maybe some. Well, we're already seeing that, and that continues to expand, deteriorate further. We could see the Libyan war, we could see the Syrian war. It doesn't really get better. But why this is different from others is because Russia is quite significant in terms of the energy space, and literally the things they have said to do would cause a ripple effect in the macroeconomic space. So if we don't get that sorted out, what we'll be experiencing is we'll be experiencing increased volatility into the market space also.
All right, thank you so much. We wish you a great weekend and see you next time. Uchenna Minnis, Global Market Strategist, a Managing Partner at Minnis Asset Management. Thank you so much.